Hey guys, it's Brandon again. Hope everyone is having a good day. So, a question I've been getting a lot on IG is Brandon, is the stock market going to ever recover? A lot of people I work with are younger investors, so they've never really been through a market fluctuation. They've never been through a cycle. And even if you're older and you're getting into the market, then it's the same thing. You're still considered a younger investor. So something I want to go over is show you that there is no need to worry as long as you invested in good companies. And by me saying good companies, I mean companies with a great balance sheet, companies that are flipping over a profit, not something new and exciting that the whole bandwagon is following. We are in this for the slow and steady run and also making profit through options. If you want to learn options, reach out to me at my IG or comment here. However, now if you look at the S&P 500, and for those who don't know what the S&P 500 is, it's basically the most profitable 500 companies in the American economy. It is called the Standard and Poor. Now you look at the very beginning. The S&P 500 was in the 260 range, right? Now, during those times, we had a lot of progress. People were borrowing a lot of money to even invest into the S&P 500, and as a result, it doubled, right? And because it doubled, people were happy, people were excited. However, boom, great crash happened. Remember the Great Depression? And we know how long it lasted for, right? It lasted for quite a while. And it took some time for the market to return some of the gains that it's made during those years. However, we keep going. We had more crashes again, had more dips again, kept going up, right? So basically, what I'm doing is just showing the fluctuation of the market over time, especially during the earlier years. I'm going to just fast forward to more recent times in our history. Now, let's fast forward to a great time, to in the year 2000, when the market was trading in its heights, right? Now, this was the technological era, basically, and everyone was jumping on the bandwagon of the tech companies. Now, as we see right here, the bubble burst. We had what was called the tech burst in the 2000s, and it took some time for the market to recover. And we have a little bit of channel activity here, meaning that the market didn't really go to up or down. It was just very stagnant. Then we had some gains here. Then we know about what happened in 2007. Going into 2008, we had the housing market crash, and that took about 2 years to recover. Now it started recovering, and as we can see, we have had an incredible bull run like the likes of any other have seen throughout history. And here again, the market was on a terror. It was growing. The economy was very strong. Unemployment was at an historical 3%. And here we see a crash again. And the reason why it crashed was, oops, bear with me. My fingers are a little stubby for this computer. But the reason why it crashed was because we had an unfortunate event that we all know about and we shall not talk about it. Now, things are picking back up and the market is growing again. So that's how the stock market basically works in an essence. And as I said, the S&P 500 is the measuring stick for the top 500 companies in the American economy. Now, let's look at the NASDAQ. Now, the NASDAQ is one of my favorite indexes to invest in. It's basically the technological sector. Now, everything follows the trend of the S&P 500 basically, right? If you look at the NASDAQ, it hasn't been around as long as the S&P 500, but it follows the literal same trend, right? Same exact thing. And all I'm going to do is just fast forward to more recent times in our history. Same thing, the NASDAQ benefited the most from the technological era during the 2000s. And here again, we saw the crash and it had to recover. Then here we're going to see the housing market crash take place again, affecting the gains. And then we had an incredible bull run. Now, same thing happened here in 2020, and then the market is on a rise again. Now, let's look at the Dow Jones. The Dow Jones is basically the top 30 companies in the American economy. One of my favorite indexes, actually. And here again, it follows the same pattern, same exact thing. Great Depression here in the early 2000, in about 2019, 30s, took some time to recover. Fluctuations happened here again. And now, this is not a historical lesson, so I'm not going to stop to talk about every market crash and everything that happened. I'm just going to fast forward to more recent times, and here we go again. It's literally the same pattern all over. So, a lot of my friends, friends who are very seasoned in the stock market. One of my mentors, he's been investing for over 30 years. And let me go right here, for example, to the NASDAQ. A lot of young folks, millennial type people, love investing into the NASDAQ, the technological sectors. Now, when the stock market crash happened here in 2020, the market shot back up and people were very, very skeptical. Even the older investors, my OGs, they were like, listen, man, I'm not budging in this market. It's absolutely ridiculous. Back in my day, it took damn near 10 years for the market to recover. And rightfully so. The reason why it took that long to recover was because back then they didn't have a thing called the internet. They lived in more of an industrial age. In our age, we have a lot of innovation, a lot of technological, could never say that word, technology that is just doing great things, literally changing the course of human history. And this is why the market is bouncing back so quickly, right? And it's going to continue for a very long time. The stock market, it is like your ex-girlfriend. Eventually, she's going to go down, right? And then her jaws are going to get tired and she's going to go back up. The stock market is the heart and soul of the American economy. And when I say the heart and soul, when you're in the hospital, the monitor is going like beep, beep, up, down, up, down, up, down. And if that monitor ever gets flat, that just means you are dead. So this is exactly why I always recommend the stock market as a great investment, because it's showing life. It is showing that over time your money is going to be in a good place as long as you invest in good, strong companies. So guys, if you like this content, like, share, and subscribe. Take care. Bye-bye.